Aoife, thanks for joining us today.
Pleasure.
Could you tell us a bit about the state of the market in Europe?
So Europe has always had a very fragmented performance state, I would say, over the past few years, and we have seen this again in 2025. So the fragmentation comes from the highlights of the hotspots like Spain, Portugal and Greece continue to see ADR growth in 2025, and we compare that to markets in the UK that are actually in decline at the end of July 2025. So why is that? So European hotspots are still attracting the leisure consumer that seems to have no price resilience or no price resistance, I should say, as yet. So the high-end traveller is really not having any price resistance and is continuing to travel to those destinations. Additionally, we've got international inbound traffic, so we've got the US traveller who we thought in March might start to recede a little bit, but has continued to travel, and we have tracked a 2.8% lift in American inbound travel internationally, so that's a good thing for many markets, and I think that really has supported that ADR growth. So although we're not seeing a huge lift in occupancy trends, we are seeing a lift in ADR trends. But if I go back to the UK and do that comparison, the UK really has been struck by many external forces. So external forces including government-initiated extra costs such as rising national insurance costs, business rates that have to be absorbed by hotels. And much of that has not only impacted hotels and their bottom line, it's also impacted businesses and the consumer who want to travel and who are making the choice not to travel. And we can see that year to date, the UK is just 0%, so 0% in terms of ADR. It's not the same across all markets.
I was going to ask in the UK, which of the markets that are standing out for you, which are the ones who are maybe kind of fallen back a bit?
I think what is probably most of a shock is Edinburgh and London, that we're starting to see decline, certainly from an ADR perspective. And that is probably telling to the domestic and pan-European travel. Perhaps it was a good base. You're also comparing from a prior year that was full of events and musical events that really did drive that performance.
Do they really make a difference, those events? Taylor Swift, Oasis, are they big drivers?
Huge drivers. Events not only will give you confidence to drive rate, but you can make your month. You can probably make a quarter if you have a few good nights of Taylor Swifties or Swifties in your property. So that has made a big difference for when you compare on prior year, but also the confidence to drive rate is just not there at the moment.
And what about supply? It was fairly restricted for a long time. Are we still seeing more supply come into the market, or how's it playing out in the UK or Europe?
It's definitely starting to increase. We are starting to see some movement. I mentioned in my presentation on stage this morning that active pipeline is growing, and active pipeline has grown by 2% year on year. Doesn't feel super exciting, but it's still positive. But the problem that we are seeing is that active pipeline is mostly formed of early phase planning and then in construction, which means everything in the middle, in that final planning stage, is not really moving. And in fact, it has declined by 28% across Europe from the prior year, which then means that supply chain is going to be very, very slow over the next 12 months. However, one advantage, I suppose, is that we're seeing less closures. So we had a period of 5-6 years of just continuous closures, but that has started to normalize, and the longer term averages are very, very normal. So that will help. But yeah, we expect supply to grow at about 2 to 3%, and that should actually balance when you start to balance supply and demand, occupancy starts to come through, confidence starts to rise, and then that pricing position or pricing premium can come back somewhat.
Fantastic. That's a nice note to finish on. Aoife, thanks very much for joining us today.
Thank you, Patrick.